It's good to be here. Actually, 2008 is the anniversary, the 10th anniversary of that wonderful period in the shipping market. I'm just so glad I was around for it. This was just the point in 2008 when we were all getting ready to see Capesizes fixing for $300,000 a day. I just actually met Morten Arntzen earlier, and he said, "I hope you're going to cheer us up." And so that I've now said something optimistic. We did once make $300,000 a day on a Capesize. 10 years on, there's a lot of water under the bridge, and things have changed quite a lot. There was not always the way you expect. There was a joke doing the rounds in 2000, at the end of 2008 after Lehman Brothers, which went as follows: what is the difference between a banker and a pigeon in Trafalgar Square? This is London, obviously. And the answer is that the pigeon can still put down a deposit on a BMW. The implication being that the poor old bankers couldn't afford their new cars. The strange thing about this is that 10 years later, the pigeons have totally disappeared from Trafalgar Square, but the bankers in London are still making lots of commissions and ordering big cars. So I think it's a nice little demonstration that you really don't know how things are going to develop. And I guess most people in this hall today have a feeling that things are changing, and I do believe things, we're in every cycle's different, but this cycle has some quite different things for us to look at. And what I want to focus on this morning in these brief introductory comments are really three things. I'll first run through a few market slides just to position us and give us a sense of where we're going. And I think the news there is perhaps not as bad as it looks if you sort of look at the markets themselves today. Then I want to say a few words about the financial situation with banks, because certainly there have been changes in the banking industry which are really quite pressing in terms of the availability of finance for some parts of the shipping industry. And then I'll finish off with perhaps what I think is the one biggest change, which when perhaps the younger people here look back in 20, 30 years' time, they might say, yes, this was the recession when that happened. And I'll tell you what that is at the end of my comments. But first, let me run through a few slides. This is the Clarkson index, which is an average index for tankers, bulk carriers, container ships and gas. It sort of spreads its net fairly wide. And I think it tells a pretty clear story. We had a wonderful decade in the previous decade. $10,000 a day, I take, is the watershed. When you get below $10,000 a day across all those markets, it means life is getting pretty bad for everybody. And I hope you can see the slides okay. Last week, the index was at $10,002, so it's come off a little bit in the last couple of weeks. And if we just home in on the tanker market, that's not been a particularly exciting story. It was very bad in tankers until 2014. Then we had a good run, quite good rates, in fact, very good rates for about 18 months, which the tanker investors celebrated by ordering a lot of ships. And now we're back down to about $12,000 a day on average. And, we've been seeing V's fixing for very small sums over the last week or two. So the tankers is not that brilliant. And the story is similar sort of thing for the bulks. It looks on these indices rather similar to the last few years. But I think there's one very important thing's happened when you're looking at investment and lending. And that is, I reckon last year, beginning of last year, we passed the trough of the cycle. Whenever you're, when you're looking at these presentations, you go through the fundamentals and you see where you are. And I would say until about the beginning of last year, there was worse to come than what we'd actually had, and you had to get through that trough. I'd say now we're past the trough, which doesn't mean it's going to be universally better immediately, because if you look at these, the 90s was a lesson that it can take quite a few years to fix the damage done in a very deep recession like the 1980s. It was well into the 90s before we really got back to decent freight rates where you were getting lots of returns. But we did get there in the end, and I'd say from 87 onwards it was upwards. It just took time, and I think the same sort of position is true today. The first thing that's happening, which is positive, is the world economy is now recovering quite nicely. At the worst bit in 2016, world industry, this is world industrial production, and as you can see from the chart here, I don't know if it won't show up on here, but the index was at about 0.5% growth in 2014-15, and it's now got up to about 5.5% growth, which is a very decent rate. Not quite as good as the previous decade, but it's it's motoring. That's the good news. The seaborne trade has followed a very similar pattern. It's gone from 2.1% in 2015, which was disappointing, to around 4% this year, which is a very decent historic rate. It's above the historic trend, and we think, this year's going to give us another maybe 3.5% to 4% growth. So the trade side is absolutely fine, and as it has been for the last year or two, really. The demolition is doing a good job. This shows demolition, total shipping demolition in million deadweight tons, and that's been running at about 45 million tons a year, which is really materially helping to reduce the supply. So, and that looks as though it's going to continue this year, maybe this 35 million deadweight, which with trade growing at 4% is good news. And on the shipbuilding front, at long last, the shipbuilding industry is beginning to reduce its output. The peak was in 2011, when in this chart you can see the blue lines show that the output peaked at 160 million deadweight. By 2013, it came down to around 100 million deadweight, and it stayed there thanks to pretty consistent ordering. I mean, the red line is the tonnage of ships ordered, and in 2014, right in the middle of the recession, ordered 170 million tons of ships, of which 100 million tons was bulk carriers. If you're going to do this sort of thing, you can't expect good news, I mean, I'm very sorry, but, you live with what you do. And fortunately, the last 2 years, we've seen the levels of ordering really fall for the first time, and you'll notice the light blue lines, the three light blue bars show that we're showing the deliveries falling from around 98 million tons last year to about 72 million tons next year, and 65 million tons the year after. So we're moving in the right direction. We're actually reducing the supply of ships at a time when the demand is growing. And so although the rates may be not very good, the underlying fundamentals are beginning to move in the right direction, which is excellent. It's not quite as good as it could be, because if you look at the growth rate of the world fleet, the bars in this chart show you the tonnage of the world fleet, which has been going steadily upwards thanks to the investment over the last 6 years. The red dotted line is the percentage growth rate, and that's been coming down fast, and it's heading for about 2.5%, and that's good news, because the fleet is actually now growing more slowly than the the growth of trade. And so that means that we're reducing the surplus, but we still have got about 15% surplus capacity to get rid of. So we're not quite out of the woods yet, but we're heading in the right direction. And this chart sort of sums it all up in terms of the two lines show supply and demand. The red line is the supply, the blue line is the demand. The difference between them is the surplus. And you can see how that surplus has built up since Lehman Brothers. And it's steady at the moment. We really need to get rid of it, and the blue bars show the percentage of the fleet surplus and shows it coming down. But I think we've got good news, but not, we're going to have to work hard the next few years to keep going. This is a time to watch your budgets very carefully. But I said in rounding off my comments, I think probably all recessions, these big recessions often mark a change in the world, something big change. For example, in the 1980s, as a recession, Europe lost all its shipbuilding and a fair chunk of its marine engineering to Asia. And I think probably when we look back, we will see this recession as the recession when the leadership in maritime affairs moved from the Atlantic to Asia. And the statistics that support this, this is the chart. It shows you the black dotted line is the North Atlantic's share of seaborne trade. And if you go back to 1950, the North Atlantic controlled 89% of the trade. In 2007, Asia, for the first time, Asia's share overtook the Atlantic. And today, Asia has 63% of world imports, and the Atlantic has about 47%, and it's going down steadily. So I think really Greece is an interesting position here because Greece is the most independent of the North Atlantic ship owners, and in many ways is closer to Asia. And I don't think this doesn't mean there's a business for independent ship owners. Independent ship owners are offshore. Over 70% of the fleet is registered with an open flag. So what it does mean is that the customers we're dealing with are changing. And perhaps the final point I'd make here is there is a whole new lot of technology around, which we're going to discuss this afternoon, the digital technology, what I've called smart shipping and many others do. This is a big shake-up for the organization structure of shipping companies. It's not going to happen overnight. It might take 20 years, 30 years to happen. Containerization took 30 years to happen. So just because it doesn't happen next week doesn't mean it's not going to happen. The Chinese are absolutely committed to developing this technology. They've invested billions of dollars in artificial intelligence, and Marintech, just before Christmas, heavily featured the smart shipping concept. Europe has a good position, I think, for developing this, and I've always noticed, one thing I've noticed over the years I've been around is that somehow Greek ship owners have a very good nose for where the money is and how to change when the wind blows in the right direction. And so on that note, I'd like to close my comments and say, banking is an issue. You've got to have money to develop the business. There is a problem in the banking sector for the mid-size finance. I hope we're going to hear a lot about that today and maybe get some answers. The market is past the worst part of the cycle. It's going to take a while to get better, but it's the right end of the cycle. That's the key thing. And we're going to all have to work hard. And there's a new technology in town. And really, it's up to each principal here to make up their minds what it means for them and what they have to do to make it work. And always remember, if you don't do it, somebody else will. Thank you very much for your attention.